Sigrid, tell us about APREA and how has COVID-19 affected the members of your association?
Thank, thank you, Fritz. Good morning, everyone. As a short background, APREA promotes real estate and infrastructure as an asset class. We are a voice for the investor groups, including real estate investment trusts, or REITs as we call them. As a champion for real assets and the investment community, we advocate for the improvement in cross-border investment rules, ground rules for doing business, essentially, removing barriers to expand in the real assets sector, and also the adoption of best practices and industry standards. And to your question, Fritz, on how COVID has affected our members, as I've mentioned a while ago, they're prominent players in the real asset sector. And just like many, they've had to contend with the disruptions in their businesses. So many have been preoccupied, now that we are reopening in many places across Asia Pacific. Here in Singapore, we're close to phase 3, I'm hoping. That means that we'll be fully open. Japan is now open, Australia as well in many places. So the focus has been on dealing with the day-to-day issues in terms of functioning properly, but at the same time taking stock in terms of how to reposition themselves for this recovery. As Kelly has mentioned, in Asia, we've seen growth. I think we're going to be leading the growth globally, right? And so what we're seeing is that now many of our members are really focusing on that. Many were hard hit and continue to be hard hit by, if they have exposure to retail and hospitality assets. But one thing I would say is that when we enter this downturn, this forced downturn, essentially a lot of them actually were in good financial standing. Okay, so that means they had low leverage, and so they're kind of faring quite well during this down cycle. But I would have to mention too that the governments pretty much across Asia have been very helpful in terms of riding out this pandemic. Many of our stakeholders have actually benefited from the stimulus packages and relief measures that were offered.
REITs as an asset class had a great year in 2019, but have been pummeled in 2020. What are you seeing? Are investors buying on dips, or are they shifting to specialist classes such as data centers or healthcare or industrial and logistics?
So very good question, Fritz. REITs have not been spared from this volatility we've seen in the equities market. Just to give everyone some context in terms of how REITs have performed historically, REITs have had like double-digit returns. And we're looking around 20%, by the way, in terms of returns across all asset classes. So these are your office, retail, hospitality, and even some of these new hot classes like your data centers, logistics, and so on. Okay, but when COVID happened, so this year, there was a sharp sell-off. Okay, so if you look at the volatility, it really is quite a lot. So there was a sell-off in March. We've also heard and seen some of the REITs conserve cash, in fact, even have to cut back on some of their distribution per unit. But this is not really a story across the board, okay? But fortunately, just like the rest of the world, the markets have also stabilized. We've seen REITs recover, recoup some of the losses, not a lot, but 15% higher today from they were, compared to March. And again, as I've mentioned, we have to credit also the governments in many cases for helping out. On a sector level, you're very correct in pointing out data centers, logistics, very popular among investors, and they're doing well. Healthcare is something to have to add to that. But this is a story, as I've mentioned, that has been playing out before the pandemic. And what the pandemic has done is really to accelerate the investor interest towards these sectors, and this is not likely to change. I think, given that e-commerce activity is here to stay. We're kind of used to that. So some of these structural things that we have seen pre-pandemic likely here to stay. Okay.
Well, when we look forward to 2021, a recovery year, as Kelly shared with us earlier,
Mm.
what opportunities do you see moving forward in terms of investors being able to position themselves properly?
So, as Kelly has mentioned, I think what we're going to be expecting is a lower for longer outlook for interest rates, right? And as he also reiterated during his presentation, this is a very critical support for the property markets. So pretty much across all asset classes, okay, we will see we will see them benefit from this. However, it is critical to that this down cycle, okay, we should see a vaccine, to finally happen, because otherwise, it's going to be difficult, I would say, for many of these markets. We've seen the U.S., for example, they opened and now have some issues again with the pandemic, with the virus, and then possibly have to shut down in some cases, in some cities. But it's kind of difficult, and that could happen. All right. But for investors, I would say, when you're looking at the REIT landscape, uh, Neil has alluded to this a while ago. It's all about fundamentals. Our region still has favorable economic and demographic trends if you look at Asia Pacific. And REITs are a good barometer of that, with the asset classes. And it's something for investors that they need to look at.
And finally, what is your outlook for REITs in Asia Pacific, especially in the Philippines? Do you see more of them coming to the market?
Absolutely, Fritz. I'm a big fan of REITs. We're a champion of them as an organization. But more than that, I've mentioned returns. If you're an investor, uh, REITs are something you need to embrace. Returns are over 10, 15%, very, very, very good returns. But at the same time, I would like to mention to our audience here that REITs will benefit from government support. In China, REITs were introduced in April. And this happened after many, many years of being on the table. And why this is important, China today is also recovering, just like the rest of us. It's ahead in terms of in their economy recovering, but they're using REITs, by the way, to be an impetus for economic growth. The focus of their REITs are on infrastructure. And we all know that infrastructure is critical for urbanization. And we're seeing that as well in many places. India, infrastructure is the way to go as well, and also real estate for REITs. Now, to your question about the Philippines, uh, the economic significance is also there. If we look at the first Philippine REIT, it's focused on what? The traditional asset, right? Office. And why this is important, I've heard, I was listening to Rick a while ago about the BPO sector, and even, what Kelly has mentioned in his presentation. The BPO sector contributes a significant portion of the Philippine economy. And for it to thrive, real estate has to support that. You have a lot of multinationals who are tenants of this, who are part of this BPO sector. And you want to make sure that you have the right real estate infrastructure to support it. Now, the other thing too that I would like to mention, REITs actually provide liquidity. And that's actually good, because that means that it will entice more investors to be investing into it. So liquidity is another one. And the last thing that I want to mention, investor education. And this is where like an organization like APREA will have to play an important role. It is very important that we educate the public in terms of what REITs are. Uh, we have a lot of primers, webinars, investor days that we put together. And we want to make sure that people who are interested in REITs will have the best information that they can access.
Well said. Thank you, Sigrid. Great
You're
hearing from
welcome.
you. Dave,